Guys, so today I'm going to be showing you how to use this new indicator called the market structure analyzer. But before we dive into it, I just want you to know that the past performance results do not guarantee the future results. So this should be not treated as a financial advice. You can use this tool for your own benefits, for your own trading, and applying proper risk management. So so this indicator, as you can see here on the charts, it spots the swing lows and the swing highs, as well as order blocks, which also has a middle line showing you the equilibrium level of the order block. So these order blocks can also act as a supply in the future and also the demand level. So as you can see here on the charts, we are only on a downtrend because the price is breaking structure here is breaking lows, so we're on a downtrend. You will notice that we have a dashboard here which shows you the trend scanner and the period, and then shows you the market direction if it is up or down. So on the higher time frame here, or higher time frame H1, the trend is up. We are trading on the 15-minute time frame. So if you trade, usually you analyze the markets at the higher time frame and then you trade on the lower time frame for good entries. So with this dashboard, it will help you to see the bigger picture of the trend, whether it's up or down. So the scanner, it scans the market structure, it doesn't use any other indicator. So on the higher time frame, it will look for market structure, the highs and the lows. If the price is making higher highs and lower highs, which means it is on an uptrend. If price is making lower lows and lower highs, it is on a downtrend. So at the moment, the indicator is telling us that on 1 hour time frame, the market is up because it's making higher highs and lower highs. So another thing you will notice here, we have the levels. We have entry levels here, the buy level, the equilibrium level, the sell level, this level where what I call it the purge level, and the buy side liquidity level. Also we have a sell side liquidity level and also the resistance level at the top right there. So these levels are based on the swing highs and the swing lows of the daily time frame. So what it does is it checks the swing highs and the swing lows of the daily time frame. We know that at the highs and at the lows there's liquidity there, which means there are buy stop and sell stop, or stop losses and stop losses at the high and stop losses at the low, because those who went in and sold here, they put their stop losses at the swing high, and those who bought here, they put their stop losses at the swing low. So the stop losses acts as a stop loss here. It also acts as a buy stop, because if price comes back down there, it will close. We know that when your order is closed, it means you have bought. If you have bought here and then you have sold here, and then if you have sold here and the price hit your stop loss, then you went out of the market, so you have bought at that level. So they act as a buy stop and a sell stop. So we have a buy side liquidity here and the sell side liquidity at the lows. So when the price comes all the way up to this level, what I call it the purge level, because we see the price will take out these stop orders here. Some traders will move their stop losses higher and higher and higher until they are liquidated. So I call it this level a purge level, where those traders who are like to move their stop losses in this area here, this level here, is likely to be the area that their stop losses can be liquidated, because it's also in alignment with the other swing highs, and as you can see. So price has been creating liquidity at these swing highs as price is going down. So it is possible that the market will target all those stop losses at this high. And then on the higher time frame, we are still on an uptrend. So for entries, because in the higher time frame we're on an uptrend, we want to see a market shift from the current time frame. You see that there was a breakout structure here down. The market has been trading down, which means it was pulling back on the higher time frame. Now on the lower time frame, which is 15 minutes, we want to see a change of character here, a price breaking, closing above the swing high, and then if it does close above the swing high, we wait for price to make a retracement, at least maybe to the equilibrium level or to the SPY level, and then we can enter our positions. This sell level here can also act as your buy. If price has already shifted upward, then those levels can also act as your entry levels. But for now, since the price is trending down, we don't want to trade against the trend because the trend is telling us the price is up. So we want to see a shift here, and then we place our buy a limit or buy at the market if price goes to these levels. Okay, now we see that the higher time frame is telling us that the trend has shifted to downtrend, but on our current time frame, we see that now the market is no longer on a downtrend because it's broke this swing high. So we are not going to sell. We are going to wait for price to make a retracement to this level and then enter alongside with the current trend. But again, this would have been a nice sales setup because price almost touched the purge level, so you would have placed your sell at this level or sell limits at this level, and your stop losses at above this buy side liquidity, and then take your profits at the sell level or at the equilibrium level. See now the trend on our 1 hour telling us the price market is shifted to an uptrend, and we also confirm on our current time frame that indeed now our current time frame is in alignment with the higher time frame. So on the higher time frame we have an uptrend, and then on our current time frame we see that there is a breakout structure up here, and then we have this swing low and this swing high, and then price now if it comes to this buy level you can enter or also enter at the sell side liquidity here. So again, these levels can also act as your targets. So as price is moving into your direction, then you can place your TP at this level, TP1 or TP2, at the buy side liquidity level and also at the resistance level. Okay, you see now here that the market was ranging here. So we have traders who have been trapped here because the market was ranging. Traders who were placing their sell stop here, or buy here, buying here, placing their stop losses there, and also those ones who are placing their stop losses at this. So the swing high and the swing low, it acts as liquidity zones, because you see that we have the sell side liquidity and the supports, and then we have a buy side and the resistance level at the top there. So we know that on our higher time frame, the trend is up, and our current time frame, the trend was up, and then started to consolidate here, where then it hits our sell side liquidity. So we have bots at this level here and take our profits at the sell level here, or even place our take profit at the purchase levels there. See now on our higher time frame, we have a shift here, which means as price was going up, now it has shifted to sideways. So there's a shift. This price is not trending up or trending down at the higher time frame, because you can, as you can see here on our current time frame, we know that the market was ranging this high and this low. So you see here that stop losses were taken out here and stop losses here were taken out. So there's a lot of manipulation here. And the other area of interest here, you see that there was a breakout structure here, and then that also coincides with our uptrend, because you see previously price was going up, so it's trying to continue its direction again after this consolidation. And you can also take our positions at the buy level or at the sell side liquidity level. But we have this order block. Okay, if price comes to this order block, then we can place our buy orders there. As you can see, price went up. You see, you can also scalp, because even though you see that on higher time frame there's a market shift, so there's no direction up or down, and here we can also scalp, because you see that there are good setups here, because on the current time frame you see that there's a breakout structure here, and we have an order block here, and previously price was going up, so there's a high probability that price will continue to go up again. Okay, see here, this was a nice buy setup here. We bought here because you see that there was a breakout structure here. Price went up, and then we have this order block here where price failed to close below it, and then it's retraced, made a wick here at our buy level. So this will be would have been a nice buy entry, and our stop loss is at this sell side liquidity. You see, even on the range markets, you can still take a good entries, but that comes with experience. So once you use this indicator and gain enough experience using it, then you will be able to take any position, even if the market is ranging on a higher time frame or is trending. Well, look at that. If you have entered here, nice profits there. See, another thing to consider here, you see that okay, price is going up, then started to shift here down, and then what you will have done is place your set limits at the page or at the buy side liquidity, because you see that there was a shift of of the trend here, and then you would have placed your scalping trades if you are scalping. Again, another entry for buy here. You see there's a breakout structure up here, and then price reach this block here and this buy level. You have entered buy, place take profits at the sell level, TP1 and TP2 at the page level. Okay, because the higher time frame is still showing that the trend is still up. Yeah, so you can use this indicator with your current strategy and integrate it with the strategy, or develop a new strategy. But I'm using this indicator on the live charts daily, so I have a strategy that I've developed using it. But in general, I use the market structure setups that is generated by this indicator. But as you continue to use this, you can also come up with your own strategies. Yeah, so that's it for today, guys. So I'm going to be uploading other videos on my YouTube channel using this indicator on the live charts. So stay tuned.